Good day, everyone. Welcome back to Profit Arena. In today's video, I'm going to be explaining the concept of market structure, how to be well positioned to take advantage of the opportunity that the market provides, how to minimize losses and to maximize profit by understanding the concept of the market structure. Remember, the market structure is the fundamental of technical analysis. So your understanding of the market structure would go a long way in helping you become a profitable trader. So I need you to pay rapt attention so you can understand the concept that will be discussed in this video. Now, I also need you to know that this channel was created with you in mind. I will be holding your hand all through this free mentorship program to ensure you become a profitable trader. All I need from you is your commitment. Also, at the end of this video, there will be a quiz to test your understanding of the concept. Do well to answer the quiz in the comment section, and I will go through your comments to correct you if need be, or to congratulate you if you answer them correctly. And also at the end of this general mentorship program, there will be a group. There is already a group created, and you will be added to that group where successful traders drop their signals. Like myself, I drop signals, and also my weekly chart outlook. You being in this group will help you to network with like minds and also people that are already profitable in the game, right? So you wouldn't want to miss out on being on this group. So take this mentorship program seriously so you can get to pass your exam, all right? Now, without further ado, let's dive into the video. So what is the market structure? First of all, what is a structure? I believe structure tells a story of a particular object, right? In this scenario, the market structure tells us the direction of the market, right? It tells us the direction of the market across different time frames. Remember, price, whatever you're seeing on this screen right now, what you're seeing on the screen right now is the representation of price by candlesticks in respect to time. So each of these candlesticks tells you a story of what happened to price at this point, right? Let's take this last candle that's forming, for example, this candle that's forming right now, or let's use this candle that already formed. This candle tells us that the sellers took control over the market and they sold, right? So that market closed, this candle closed as green. Now remember, each of these candle, this takes 1 hour to be formed. Why did I say that? If you look to the top left here, you're going to see different time frames, right? 1 minute, 3 minutes, 5 minutes, all the way to 1 month, right? It means, and I'm on 1 hour right now. This is the one I'm on right now. So it means each of these candles took 1 hour to be formed, right? So this structure you're seeing here will be more reliable compared to when you go to 1 minute, right? Let's go to 1 minute and see. I've just selected 1 minute now. You can see that on the 1 minute, there are also structures as well. Now, the tiny image, the tiny sketch I did on the 1 hour, see how big it is on the 1 minute, right? See how big it is on the 1 minute. Now, when you come to the 1 minute, there will be more candles and more structures, right? And it will tell you a different story of what price is doing. Also, if you go to the 1 day time frame, you are going to have less candles here, and you're going to have a more defined market direction, all right? So price is represented by candles and with respect to time. That is what you have here on the chart, right? You need to understand this. Please understand this concept that whatever you're seeing on the chart here is price represented by candles with respect to time, all right? With respect to time. So price moves in two directions, the uptrend and the downtrend, the upward movement and the downward movement, right? These are the two directions of the market. But then we have three phases of the market. The three phases of the market we have is the uptrend, which is when price is buying, when price is moving this way, right? Going upwards. And then we also have the sell market as well, which is the downtrend, right? We have the sell market this way. And the third phase of the market is the consolidation phase. The consolidation phase is when price is moving within a range without an impulsive move, right? Without an impulsive move, when price moves this way, right? We say price is ranging. Now, when price is buying, we say this buying market is characterized by higher highs, right? Higher highs and higher lows. Higher highs and higher lows, right? Higher highs and higher lows. This is what characterized a buying market. So any market you like to analyze and you see a structure like this where there are higher highs, higher lows, you know it's a buying market. Now, why is it called a higher high? It is called a higher high because the previous high, the new high is higher than the previous high. The new high created is higher than the previous high, so it is called a higher high. Because look at the progressive nature of this high, right? This high here is higher than the previous high. This one is higher than the previous high, and this high also is higher than the previous high. Also, we refer to these zones as higher low. Why is it higher low? It is higher low because this low right here is higher than this previous low, and this new low here is higher than this previous low as well. And this low which is forming here is also higher than this low that already been formed here, right? So we call it higher highs and higher lows. Now, in the case of a downtrend, we refer to it as lower high, and lower low, right? Lower low and lower high, lower low, lower high. Now, why is it a lower high? It is a lower high because the new high is lower than the previous high, right? The new high is lower than the previous high, and this one is called a lower low because the new low as well is lower than the previous low. You can see the progressive nature of it, right? You can see the lows, each new low form is lower than the existing low, right? So we call them lower low. And each of the new highs as well is always lower than the previous high. So we call them what? Lower high. So please understand this concept. Now in the consolidating market, right? In the buying market, right? We look for buy opportunities and then we buy the market, right? And we ride on the trend. In the selling market as well, we look for sell opportunities and then we ride the trend. But in a consolidating market, we do nothing. We don't trade consolidating market. Why? Because in a consolidating market, the strength of the buy and the sell is even, right? So you cannot pick side. You cannot pick side when the trend is even. If you pick a side, what if you pick the wrong side, right? So that's why the best thing to do when the market is trending, when the market is ranging, is to stay out of it until there is a breakout, until there is a clear breakout, just like we discussed in our last video about expansion. Meanwhile, if you've not seen that video, I will advise you to watch the video so you can have a better understanding of what we are talking about, right? I'm going to leave a link in the description to help you access the video easier, all right? So unless a breakout happens, when a breakout happens, then you can pick a side, right? And you can leverage on the opportunity using the element of price, be it imbalance or order block, and ride on the trend, right? Now let's quickly look at examples, a chart example of a buying market which is called an uptrend and a selling market which is called a downtrend, right? Now look at this market from this point, started buying from this point, started buying, creating higher highs now, higher lows, higher highs. You can see clearly higher lows, higher high, higher lows, higher high, higher lows, and it just kept creating higher highs and higher lows like that, right? You can see what price did. Just kept creating series of higher highs and higher lows. So when you come across this type of market, we say this is a buying market. This is a buying market, right? This is a buying market. So what you want to do is take advantage of the buys and make money, make free money. Now let's look at when price is selling, right? Look from this zone. Price started, price failed to create a new high. So instead it created a high that is lower than the existing high. Remember, we said downtrend is characterized by what? By series of highs that are lower than the previous high, right? So that was what price did here. Created a high, lower than the previous high, also created a low lower than the previous low, right? And you can see how price moved. See how price moved, right? See how price moved, creating series of lower highs and lower lows, right? So in a situation like this, we say what price is selling, right? So this is a downtrend, while this is what? This is an uptrend, right? So this is a down. Let me just try to label them. Let me try to label them for you. So lower low, this scenario, and lower high, right? Although this is a pullback, but then it's an example of a selling market as well, right? So meanwhile, these ones are higher highs and higher lows, right? So the next thing I will be talking about is how do you know when to buy, right? It is not enough for you to actually understand the direction of the market. Yes, you've understand that, okay, this is a buying market. You've understood that Bitcoin is actually buying. Now, what do you do? How are you going to be positioned so that you can take advantage of the direction that you've discovered or that you've understood, right? That's where the next subtopic comes in. It's called swing structure. Swing structure. Now, what is a swing structure? Swing structure tells us the direction. It tells us the current leg, right, of the market. It tells us the current move of the market. Now, having mapped out your higher high and your higher low, the last higher high that was created is the swing structure. The last higher high created is the swing structure. Now, so this is the last higher high that was created, right? This is the last higher high that was created. So this then becomes our swing structure, right? This is the last high high that was created. This becomes our swing structure because this broke this structure here. This broke this structure here, right? Okay, let me remove all these things now so you can have a better. Now this was the last high that was broken, right? And then this was the new high that was formed, right? This was our last our last lower high, right? This was our last HL. This was our last HL, right? Our last HL, and here was our last HH. Now, so this is a swing structure. This now becomes what? This becomes our swing structure, right? These are swing structure. So now, if we want to do anything in the market, we are going to forget every other thing. We are going to forget all these things that price already did, right? Now, we are only focused on these new swing, right? That broke structure for the trend continuation. Now, so what do we do in a situation like this? What we do is we go to our lower, having mapped out this zone. Remember, this is a daily time frame, right? We now look for element of price that is in play here. Is it order block? Do we have an order block here? Do we have a fair value gap or imbalance? And then we look out for, do we have a liquidity pool? We look out for these things, and what do? We try to take advantage of the element of price in play, right? Now, if you look closely, you're going to see that we have kind of a liquidity pool around here. Look, we have a liquidity pool around here. Look how what price is doing here, right? So this can be what? This can be a channel for price to change direction, for price to take out, for price to change direction. Remember what price already took out these, just look closely. I need you to look closely. Price has already broken this structure, right? These are last HL. Price already broke it, right? Which is also an indication that price might want to reverse, right? This could be reversal. In our last video, we discussed reversal, right? We see a change in market direction. So it could be that price is trying to change direction by taking out this higher low that created a new high. So in this situation, we will not do anything. We just anticipate. We just watch the market do a thing, break this structure, give us a sell setup, and then we take advantage of it. Right? We don't try to just jump into the sell right now. No, we don't trade like that. We are not gamblers. We just wait for price to come back, give us a sell structure. And now once that means we'll have a new swing structure. That means this zone here will then become our swing structure, right? So swing structure, but price is still forming. That's why I did not mark it. I didn't mark it up. Price is still forming, right? So what am I saying? Swing structure is the last break of structure that happened, right? The last break of structure, and we just had a new break of structure now. We just had a new break of structure now. So that's why I said this is now our new swing structure that has just been formed, right? This has just been formed, all right? So the next thing we'll be talking about is the substructure. Now, what is a substructure? Swing structure, like I said, is the new break of structure. The substructure is the pullback, right? Is the pullback. Let's say, for example, this is price moving in an uptrend, right? This pullback that forms the higher low is what we call the substructure, right? These are pullbacks. Let me try to highlight them for your understanding. For example, this is a pullback. Hold on. This is a pullback, right? This is a substructure. This is retracements, right? Retracements are substructures. This is a substructure. This right here is a substructure. This right here is a substructure. All these retracements you see here are what are substructures, right? So substructures are retracement. Now the reason why price retrace is to get more liquidity, so it can have more strength to keep pushing in the direction, right? Price always retrace also to take in orders, right? To take in orders, because whenever price move impulsively, there will be an order stacked in that zone. There will be an order. For example, this is an order block, right, from where price expanded. So there are orders here. So if price gets to this zone, you're going to expect price to move, right, to the upside. Price is going to move, even if it's a short rally, right, but price is still going to move. We're expecting the orders that are stacked here. So in each of these zones, you see price retrace is just to pick orders so it can have more momentum to keep going in that direction. So that is the essence of the substructure or the retracement structures. The next thing we'll talk about is the minor structure. Minor structure. Now, minor structures are actually structures on lower time frame, right? They are structures on lower time frame. They are minor. They are minor because you don't pay so much attention to them, because they don't actually determine the direction of the market, right? Because there are lots of structures on the lower time frame. That's why we refer to them as minor structure. What you see when you see a change in direction of price on the lower time frame, it might not necessarily mean that price has changed direction on higher time frame, right? So that's why we refer to them as minor structures. There are lower time frame structures. You can see now, you can see what is going on here. So many structures on this 3-minute structure. If I go to 1 hour time frame now, you have less of this information. You can see just one candle that it's on the 1 hour. You saw how many candles it was on the 3 minutes, right? So we don't make our decision based on the lower time frames, right? Now the next one is what is the major structure. The major structures are the higher time frame structures. The higher time frame starts from 1 hour, 2 hours, 4 hours, daily, weekly, monthly. Any structure you see on these time frame, they are referred to as the major structure. They tells the real direction of the market. They'll tell you the real direction of the market. So you can actually make your analysis or your decisions based on this type of structure, because this is the overall structure of the market. All right, this is the overall structure of the market. So the next thing I'll talk about as well is called breakup structure. Breakup structure. Now, breakup structure. Now, what is a breakup structure? A breakup structure is when price moves, keeps creating higher highs and higher lows, right, to continue the trend. When price moves by creating higher highs, higher lows, or lower lows and lower highs to continue the trend, right? For example, whenever there is a new breakup structure, we refer to it as this is a new breakup structure, right? These are, let me erase all these things. So breakup structure is when we have a new breakup structure. This is a breakup structure. This is a break of this structure as well. This is a breakup structure. This is a breakup structure, right? For price to just keep moving. So whenever there's a breakup structure in one particular direction, we call it break of structure, right? We call it BOS. So whenever price moves, breaking structures, taking out the previous highs created to make sure that price moves in a certain direction, in a specified direction, we refer to it as well as BOS. So this is BOS. This is BOS, right? This is BOS. So BOS is positive. Breakup structure is positive. I need you to understand this concept that breakup structure is when price takes out highs created, right, to continue buying, or when price takes out lows. For a bearish scenario now, this is a BOS. This is a BOS. This is a BOS, right? When price takes out lows, you can see this structure was breaking. This is a BOS. Sorry, forgive me for this. Okay, this is another BOS, right? Another BOS. Because price took out the existing low, right, to break structure to the downside to continue with a downtrend move, right? So we refer to it as BOS, and BOS are positive. They are positive because they continues the trend, so it is positive. Now the next thing we're going to look at is called the change of character. Change of character is referred to as COH, right? Change of character is when price change in a direction, right? When price try to change from a certain direction to another. For example, this is what is currently playing out now with Bitcoin. Remember we said this was our last pullback and this was our our move, and then this and then this, right? So this was a perfect bullish market. But look at what price did now. Price took out this our low here, our higher low. Price also took out this higher low as well, right? Price already took out two higher lows that broke structures, right? That broke structures here. So then we said what? This market has changed character. When this happens, we say this market has changed character. It has changed from a good person to a bad person, from positive that was breaking highs to the upside to continue the trend, now to somebody that is taking out those lows that were meant to be protected, right? So now we say market has changed character. A change in direction. It's an indication that market wants to change direction. So I need you to understand this concept very well, very, very well. So please watch this video over and over again until you understand this concept, right? Until you understand this concept. So this is the point where now the first higher low that was taken out, right, by price is where the change of character happens. So if I want to label my chart now, I'm going to put I'm going to put COH here. I'm going to put my COH here, right? This is where my COH happened. That was where my change of character happened, right? And since price has changed character from buy to sell, it means for Bitcoin now, I'll be looking for sell opportunities, right? I'll just be looking for sell opportunities to sell it down, no longer buying. But there are some ignorant persons, because they lack knowledge, they will be, still buying Bitcoin. They will still want to be buying Bitcoin because they think Bitcoin will just keep buying like that. That's why you have an edge now over them as you're learning this, all right? So let's quickly look at a sell change of character, a change of character for a sell market. Now this is a perfect example. Remember, price was what? Price was buying, selling. Price was selling, creating lower highs and lower lows all the way down here, right? So this was the last low that price created. So what price was meant to do in an ideal trend continuation is for price to do this and then come down to create a new low to take out this, just like the way he did here, and here, right? But instead, look at what price did. Instead of price to come down to take out this low, to continue the trend and maybe continue something like this, just keep going down this way, Instead, price went up and took out this high here that was responsible for this low. Remember, it was this higher, this is a lower high, right? This is the last lower high that was created. This is the last lower high that created a lower low. So price was supposed to what? Create this was supposed to be what? To become a lower high. This zone was supposed to become a lower high. If price would have what? Created a new low, this zone would have become a lower high. But because price failed to create a new low, price went and took out the last lower high that was created, right? So in this situation, we say what? Price has what? Price has changed character. We then have our what? Our CHOC. Forgive me for this. Right? So we have our change of character. So this was the point our change of character happened. This is the point where the last lower high was taken, is where what the change of character happened. Just like in this buy scenario, where the last lower higher low that created a new high was taken, is where our change of character happened. So take note of breakup structure and change of character, all right, because they are very, very important concepts. So guys, that will be all for now. I hope you found value in this video. If you did, please like this video, subscribe, and share to your friends so they can also, acquire this knowledge as well. Also, attempt this quiz, all right, and leave your answers in the comment section. I'll react to your answers to correct you if need be, or to congratulate you if you get the questions or the answers correctly, right? So thanks for watching once again, and see you in the next video. Bye.